All right, welcome back. We are officially recording, and I'm going to hand it over to Andy Cruz to introduce us today.
Good afternoon, everyone. My name is Andy Cruz. I'm the program specialist with the National Training Center. I'd like to welcome all of you to our webinar number 2 in our Building Financial Management Capacity Across the CAA webinar series. Today we're going to be covering budget proposals and tracking budgets. So without further ado, I'll hand it over to Allison Maloof and let her introduce the presentation team and get us started.
Hi, great. Thanks, Andy. Again, welcome back, everyone. Hopefully you were able to be with us for Webinar 1. If you weren't, then we're glad you were able to join us for Webinar 2, and hopefully you all will be able to join us again for Webinar 3. My name is Allison Maloof, as Andy said, as I think I might have just said. I am Associate General Counsel at Community Action Program Legal Services, CAP Law, here in Boston. We are, CAP Law and the Community Action Partnership are working together to provide you with this series, which is intended to increase the financial and management capacity across your community action agency. We are very fortunate to have with us key members of the Washington-Morgan County Community Action Agency team. That Community Action Agency is based in Ohio. They're going to help explore the themes with us today that we discussed in Webinar 1 and are carrying over now into Webinar 2. On that team and on the webinar with us today are Jerry Spencer, she's the Chief Financial Officer, Don Rao, who is the Director of Planning and Development, Carrie McNamee, who is the Director of Senior and Community Services. So when they are talking, what you'll see up on the screen is a screenshot of their logo. They are camera shy. They have no need to be, but they are. But when I'm speaking, of course, you will see me on the screen. As Cashin mentioned, we will have polling questions throughout this webinar. We really encourage everyone to participate in those questions. Those questions are intended to give us a more in-depth understanding of your organization's practices and procedures. They also help us to know what key concepts perhaps we should emphasize more as we go throughout this webinar. So as we've mentioned thus far, this is the second webinar in a 3-part webinar series. Just to give you an overview of what this series is intending to cover, it focuses on a team approach to creating, monitoring, and reporting on program budgets. The series consists of talking about the roles and responsibilities of the individual team members. That's including the Chief Financial Officer, the Program Director, and the Planning Director. What they bring to the table throughout the program budget process. We began in the first webinar talking about budget proposals, and we're going to continue that conversation today. And we're going to talk about not only creating budget proposals, but how to take those budget proposals, finalize them, and make them tracking budgets. We're also going to conclude the webinar series on Friday by talking about the process related to budget revisions and how information may be reported and to whom. So this is Webinar 2. As I mentioned before, we're going to be talking about budget proposals and tracking budgets. As with the first webinar, we will use a funding scenario that Washington-Morgan County Community Action Agency experienced. We hope that this scenario will help add a practical perspective to the concepts that we're trying to convey to you guys today throughout this webinar. So we want to make sure that you're getting something out of this. We want to fill those brains with more and more information. We know you guys are sometimes tapped out, but we're going to keep putting stuff in there as much as we can squeeze in. So these are the learning objectives for today's webinar. We had learning objectives for Webinar 1, and for Webinar 2, we're going to, again, focus on developing the different budget categories and line items related to a budget proposal. We're going to talk about the different uniform administrative requirements and also cost principles that would be applicable. it is important to note, and we'll be repeating this throughout the webinar as we did with webinar 1, that the type of requirements that will apply to your particular funding will be dictated by the funding source. So in our series, we're focusing on the OMB circulars, the federal circulars. But with any funding source you're working with, you want to make sure that you're aware of what their cost principal requirements are and what their uniform administrative requirements might be. So to that end, just make sure that you understand if there are any deviations from the OMB circulars that are applicable to your program, and also if there are just some requirements that are completely separate from the circulars that are applicable to your program. In this series, we're going to focus on, in this webinar, we're going to focus on looking at some examples of selected items of cost, which would be derived from OMB Circular A122, and also looking at how we would apply the administrative requirements when we're working as a team to develop a program budget proposal. We're also then going to look at finalizing that budget, taking the internal budget that the team has worked on and putting it into the funder's form, and how we go about doing that. And then we're going to turn to developing a tracking budget. So we have a full plate for you guys today. You will hopefully learn a lot or reinforce what you already know or add to what you already know. With that, we want to recap the scenario that we introduced in webinar 1. And to do that, I'm going to turn it over to the Community Action Agency, Jerry, Dawn, and Carrie.
Hello, this is Dawn Rao. To recap the scenario we're using, we are going to use for this webinar series the HUD Homeless Prevention and Rapid Rehousing Program. This was a new program funded through the Recovery Act. The state of Ohio allocated the funds out to the local CAAs and asked that they apply for this funding. The funding focused on 2 main target populations. The first being homeless prevention to provide assistance to those who were facing homelessness, and the second target population was for rapid rehousing and providing assistance to those who were actually homeless. In the first webinar, we spent time discussing the approach the team members would take when deciding if a funding opportunity is right for the organization. We explained the different roles that each team member plays with in-depth discussions about the different aspects of these roles, such as the process the CFO undergoes to determine the financial capacity of the organization, which leads us into webinar 2 and the what's next in developing a program. And we'll pick up where we left off and begin discussing the creation of a realistic budget proposal. Back to you, Allison.
Thanks, Dawn. So we want to start off by getting some information from you guys. So if you could take just a minute to answer this polling question, who in your CAA is involved in asking and answering questions necessary for developing program budget expense categories? Please check all that apply. We did have a slight issue. Cash and I don't know if we were able to remedy that, where it was a little bit difficult to check all that apply, but hopefully we'll be able to do that this go-around.
We should be remedied, and I'm sure that we'll have somebody let us know if they have any issues with that, but that should be worked out. And based on the answers that are coming in, it looks like we are not having any issues. You do have a few more seconds to get those answers in, and after that we should be able to display, see what you guys have to say.
Okay, interesting. These are some good responses. It looks like the CFO takes the cake as the person necessary for who is most responsible for sort of answering the questions. As the theme of this webinar series emphasizes, we are working here to have all of these individuals involved in answering questions necessary for developing the program budget expense categories. And we're going to talk about right now exactly kind of what those questions would be and how you would go about answering them and thinking about them. So just as we discussed different questions for CAAs to ask when they're determining whether or not a funding opportunity is correct with them, in Webinar 1 we did that. Here we're looking at some more questions. There's a lot of questions and research that goes into developing these budget proposals, but it's really important to do the legwork up front to make sure that you have a solid program that you're able to offer with the funds that you're getting from a funding source. So here we're exploring the different assumptions on which a program budget will be based. And I'm going to hand it over to the Community Action Agency to talk to you about some of these different questions on the slide.
Hi, this is Jerry Spencer. As Allison mentioned, we talked about the team approach in Webinar 1. And one of the first things we would do is rough out the types of services that would be needed to deliver the program effectively. As part of that process, we have to look at line items within the budget. For example, do we need additional space? If we need additional space, that might necessarily involve checking available space, the cost of that space, and also whether or not we might need that space on a short-term basis, and if so, would it be available? Another item that we would certainly talk about is if we move staff around internally, it would be necessary to address the staff cost pool and the space cost pool. And moving on to the next slide, there are other items that we would discuss. For example, if we had to hire staff to carry out the project, then the process obviously would not start immediately because you have to wait for grant notification. And then if you have to advertise and hire staff, then there's a lag time. So in terms of building the budget, it's necessary to consider that lag time up front because your initial costs for staff would be light, but then as you move through the project, they would increase. The timelines and staffing costs are something that you will hear about further in Webinar 3, particularly under the reporting component. And on the next slide, we also talk about some more items that you would want to consider, particularly if the program calls for something that is specialized. For example, specialized insurance. For example, do you need to have medical malpractice? If you do, is it available in your area, and is it available at an affordable cost within the resources of the budget? So if that is the case, it's necessary to call your insurance agent. Similarly, so if you needed to have lead risk assessment insurance or lead abatement insurance, those can be very expensive items, and you would need to have them addressed up front. For example, do you have any large purchases? Do you have to buy vehicles? So the team would sit down and lay out the plan and discuss all of those items. And the examples that we have given you are just some of the items that we would discuss. Obviously, we would discuss many more, and these are just examples. Now back to you, Allison.
Great, thanks. It's really important that you go through this process because the answers to these questions that Jerry's been talking about will dictate the budget categories that will be used in your program budget proposal. So this is sort of the meat of it right here. This is what's going to dictate those assumptions. So here's another polling question for you. Do your CAA's program director and planning director understand the cost principles and administrative requirements applicable to developing a budget categories, sorry. So please take a moment to answer that. In Webinar 1, we did have a similar question talking about whether or not the key team members receive training. So we're interested to know, do they understand at least the specific provisions that would relate to the categories that would make up the budget?
All right, you do have a few more seconds to go ahead and get those answers in. Many of you have already started. And then we'll be able to display.
Okay, that's great. So it looks like for more than a majority of you guys that you do have your program director and planning director spend time and get their head around these really key requirements that play into developing a budget proposal, and some of which, as I mentioned when we talked about what we're going to talk about today, we're going to discuss some of those requirements a little bit later on. So on these next couple of slides, we just have some examples of some of the more typical budget categories and line items. Those questions that Jerry was asking, they would create the line items and the information that would go into these individual line items. And you can see here, sometimes to the right, we have those broken down to a certain extent. And we're going to discuss some of the requirements that are applicable to each of these budget categories and line items as we go through the scenario related to Washington Morgan's HPRP budget proposal. On this next slide, you can see a couple more. And you'll see we just are presenting it this way as one visual way to kind of see the fact that you might have an overarching item that's really going to be broken down, and those questions and the team effort is going to help to break those major categories down into smaller categories so you have a more thorough and complete budget. All right, I'm going to turn it over to Washington Morgan so they can discuss. This is an example of an internal budget proposal that they prepared for the HPRP program.
Hi, this is Jerry again, and what you're looking at right now is just one of the many drafts that the team put together in arriving at the final budget. Basically, once we had determined the types of services that were needed and the expected number of clients who would participate in each category, we laid out, pardon me, what was necessary to carry them out. And we did it very specifically because we had specific staff in mind. So if you look at the budget itself and you go down to the fringe benefits, you will notice that each individual person identified has a different fringe benefit rate. And that is because we had identified the individuals in advance. If that is not possible and you're hiring new people, then you could use the agency's blended fringe benefit rate or plan for the maximum fringe benefits that you might have to pay so that you have the funds reserved if you need to do that. One of the other interesting things about this budget is that the item called check cutting, which generally is a finance function and is done as an administrative cost, was considered to be not an administrative cost by the funding source. That's one of the reasons it's very critical to not only read the funding notice, but to participate in any grantee training that is done in advance of preparing the grant application. One of the things that we do is we use a lot of assumptions in developing our budgets, and we write those assumptions down so that we can go back and refer to them as we go along, because as we mentioned in webinar 1, one of the important things is that you can readily and rapidly implement a program if it's funded, and sometimes it may be a year or a year and a half after the grant, after you do your application, that you actually get the grant funded. And so then you don't need to have to remember what you put in there and why you said what you said. You actually will have it in your budget assumption notes. And looking at the next slide, these are also some budget numbers that we put together that we actually ended up with putting in our final draft. The budget details out all of the costs that we thought would be needed to carry out the program. But it was also critical to make sure that we read the budget narrative and the program narrative, not just the budget narrative, because we needed to make sure that we had in the budget what the planning department and the program director were noting as deliverables. You'll also notice that the computer and equipment cost is budgeted solely under data collection. Again, another reason why you should read your funding notes very carefully. You will see in one of the upcoming slides that the allowability of these costs are in the data collection component and not in the administration or split across the other categories. And moving along to the next slide, again, when we planned this budget, we planned to spend a lot of money housing people. We purposely made decisions on the amounts of money that we would spend moving families from one location to another, and decided that we would spend very little doing that and spend the money actually on housing and utilities. Again, this was all part of the team discussion. There were no parameters laid out in the funding notice or by the grantee in terms of these requirements. We decided that rather than spending the money on motels, we would spend it on permanent housing. We also decided that because this money originated at HUD, even though it was passed through the state of Ohio, that we would inspect these units to make sure that they met the housing quality standards as outlined by HUD, and therefore we included a large amount of money for inspections. Now, part of, again, writing down our budget assumptions was that when this was funded and we began to see trends in our tracking budgets, which we will talk to you in webinar 3, we were able to go back quickly and look at these items and then decide what we needed to rebudget or reprogram. And back to you, Allison, for the next slide.
Great. So in addition to those individual line items, you also have to consider how you're going to treat the cost. And Jerry touched on that a little bit when she was talking about the data collection category and how training was treated as a direct cost because that was an activity, an eligible activity under the funding opportunity notice, and we're going to talk a little bit more about that, as she mentioned a little later on. But here on this slide, you can see sort of the 3 areas of cost that the HPRP program was specifically dealing with and that most of you will deal with in your program budgets. We have the total direct cost, total indirect cost, and total project cost. Now, as you guys might remember from webinar 1, we spent some time talking about how OMB Circular A122 treats costs. Again, we're talking about this particular federal cost principle because it is applicable to this funding source that makes up this scenario, and also because it's applicable to all community action agencies. However, we must reiterate that you need to make sure you understand what requirements are applicable to your funding source and the funds that you'll be using. So when we were in webinar 1, we talked about the fact that costs could be treated as direct cost, shared cost, administrative cost, and indirect cost. Here we're really focused on these 3 areas. The direct costs would be costs that would be directly tied to a funding source. The indirect costs would be one where it would be difficult to nail down what benefit, which program exactly the cost is benefiting. It's benefiting multiple funding sources, and then the total project cost would be the combination of all of these costs. And as you'll see, as we move along, we'll see how the HPRP program was dealing with these costs. We're going to talk just a little bit now in the next couple of slides about how an entity would treat indirect costs. There are a couple of ways under OMB Circular A122, and it's important to understand how indirect, or what's often referred to as shared costs, are treated so that you handle them correctly and ensure that they are not, do not become disallowed cost. So on this slide, we're talking about the negotiated indirect cost rate. And a federally negotiated indirect cost rate is basically an agreement between a federal agency and a nonprofit federal grantee. And it establishes the maximum amount of indirect cost that the nonprofit can charge to its federal award. The rate is developed by calculating the organization's indirect cost as a percentage of its direct cost. Now, OMB Circular A122 offers several methods for how to exactly calculate indirect cost rates, and we're not going to get into that kind of detail in this webinar. But what we want everyone to understand that when you're dealing with a funding source, you want to approach them with the assumption that they're going to accept your negotiated indirect cost rate. Now, you're going to have a conversation with them about it, of course, but that would be the easiest option for your organization, though you'll have to talk to them about that, of course, to ensure that. One important note I'd like to make is that with indirect costs, if the indirect costs are approved, the ones that are approved by the federal agency will be the the federal agency, that will approve the indirect costs will be the one that's providing the largest portion of funds to your organization. So it's not necessarily the federal agency that's funding the program that's going to approve your indirect cost rate. Also, I think I said this, but just in case I didn't, negotiated indirect cost rates are obtained directly from the federal agency. So you have to be receiving funds directly from a federal agency in order to be eligible to negotiate an indirect cost rate. Now, as you'll see at the bottom of this slide, we have an orange box. We have these orange boxes throughout Webinar 1, and they are there to signal to everyone what might be coming down the pipe with the Office of Management and Budget's proposed super circular. This proposed super circular is the combination of all of the circulars that affect federal grantees. And when I talk about federal grantees, I mean states and local governments, nonprofits, those entities that are receiving federal funds. And in this particular instance regarding the negotiated indirect cost rate, there are some interesting changes that are being proposed. One of those changes is that all federal agencies and pass-through entities, and when I say pass-through entities, I mean a state. So, for instance, when you receive your state CSBG funds, they go through the when you receive your federal CSBG funds, they go through the state. And in this particular scenario that we're talking about, the Community Action Agency is dealing directly with the state. They're not dealing with the federal government. That instance is a sub-grantee relationship. But what the proposed changes are perhaps going to require, if they are finalized, is that if you do have a federally approved indirect cost rate, that all of the federal agencies and pass-through entities that you work with would be required to accept it. And if they, for some reason, decide that they cannot accept it, then they have to be able to document reasons why they cannot accept it. And then if you do not have a federally negotiated indirect cost rate, maybe you are not receiving funding directly from a federal agency, then a pass-through entity that you are receiving the federal money from would be required to negotiate a rate with you. And if you, and that negotiated rate would have to be done in compliance with the federal guidelines. And if they are unable to come up with some rate, are not willing to negotiate with you, then most likely they will apply a flat rate. And right now the proposed flat rate is 10% of the direct cost rate. So that's an interesting future potential development, but for now, you need to comply with the OMB circulars as is, and you would work with a negotiated indirect cost rate if you're receiving funding directly from the federal government, and you would work with your funding source in determining how that would play into your budget proposal. The other option for how to treat indirect or shared cost is through a cost allocation plan. And to have a cost allocation plan, before I say that, I should say that this is the way that Washington Morgan deals with their shared cost, is through a cost allocation plan. And a lot of community action agencies have cost allocation plans. In order to allocate shared cost, you do have to have a plan, and you have to be able to substantiate any cost that you are charging to the federal award. And so with this plan, some key elements that you might have in that plan are a definition of what direct and shared costs are for your organization, and an explanation of how you're going to allocate those costs. For instance, are you going to allocate it on the basis of the number of employees, on the number of transactions? What allocation method are you going to use? And then what is your justification for using that allocation method? If you want more information about cost allocation and also a little bit more information about negotiated indirect cost rates, we would recommend that you take a look at the cost allocation toolkit. That's a partnership put out last year. Cap Law was involved in that, as well as Kay Soul, who's a financial consultant to the Community Action Network. This toolkit is available for free on the Partnership's website and on CapLaw's website. All right, so at this point, we have gone through the developing budget categories and line items learning objectives. Hopefully you got some more information about exactly how you would go about creating those budget categories and line items, how you and your team would look at the requirements that are associated with each of those line items, and maybe a little bit more of an understanding of how you would treat the costs that are a part of your program budget. And now we're going to look at the cost principles that would apply, and also administrative requirements, and how you would and your team would address those as they are creating the budget proposal. So as we've been mentioning throughout, we are focusing on the OMB circulars because that is what is applicable to the scenario we are discussing today, and also applicable to all community action agencies. On this slide, we just have listed sort of the general areas that are covered by OMB Circular A110. It's important to note, as we talked about in Webinar 1, that federal agencies have done individual codifications of OMB Circular A110. HUD, the Housing and Urban Development, the federal agency that's overseeing this particular program, the HPRP program, has codified OMB Circular A110 at 24 CFR Part 84. And so you'll see the information that your program directors, planning directors, and your CFO would get from OMB A110 would be any conditions that they would need to comply with prior to submitting a grant proposal, the kind of program systems they need to have in place, what kind of safeguards, what kind of internal controls, how often they need to check on any type of property that they may obtain, what kind of information about that property needs to be in their files and in their records, and then when they're purchasing items for the program, how they would go about doing that, the fact that there needs to be open and free competition, certain standards need to apply. Also, OMB Circular A110 would provide the team information about reports that might need to be submitted throughout the process, and also at the end, exactly how would you close out that program. So here is just an example of how a requirement from OMB Circular A110 24 CFR Part 84 would apply in a funding source situation. Here we're talking about match, and as we mentioned in the very beginning in Webinar 1, the funding opportunity notice for this program made clear that match is not required. However, if match were to be required, then for another source of funding that might be offered by HUD, then you would look at this particular regulation to determine the criteria for the different types of contributions that may be accepted to meet the match requirement. And so I just took an excerpt here from the regulation so you can sort of see, you know, what you would be looking at when you're dealing with the administrative requirements that might apply to your program. And it's very important for everyone involved in that team, to understand these requirements and be able to apply them. All right, so we've done just a quick example of how you would look at and apply administrative requirements that might affect your program and your program budget. We're going to talk a little bit more about another administrative requirement example when we talk about this selected item of cost examples, which we're going to move to right now. But before we do, we want to hear from you. I've been talking a lot, so let me hear your voice over the internet. What information does your CAA refer to when determining if a cost is allowable? So please check all that apply. Do you look at the funding opportunity notice, the request for proposal, the grant agreement, or the notice of funding award, any applicable cost principle or administrative requirements, or do you look at the funding source authorizing and appropriation statutes, regulations, and policies. So let us know where you look to determine if a cost is allowable.
All right, we have several people that are already starting to get those answers in. You do have about 15 more seconds or so to get that on in. It is, again, on that right side panel, and then we will share. All right, the poll is officially closed, and we will be able to share in a few seconds.
Okay, great. This is interesting. It's good to see that the percentages are pretty much the same across the board, because you need to be looking at all of those documents and areas. As is noted on this slide, all team members need to be looking at the funding opportunity notice, request for proposal, the grant agreement. They also need to look at, of course, the applicable cost principles and administrative requirements, any funding source, regulations or statutes, and any other kind of applicable laws. These are the requirements that, again, are going to dictate the budget categories, and they're going to inform your team as to which costs are allowable. Worst case scenario in any type of program budget proposal is that somebody in the team puts in an expense that is a non-allowable cost. So it's very important that everyone understands these requirements and where to find them for each funding source. So now we're going to talk about particular budget categories and line items. We picked out two to kind of go into more depth today with you guys. And just to let you guys know, again, we're focusing on OMB Circular A122 here, even though different requirements might apply in different circumstances. And just to reiterate what we talked about in Webinar 1, real quick recap, OMB Circular A122 is divided up into certain parts. And the first part deals with general principles regarding the allowability of cost. And we talked about how you would look at whether or not a cost is allowable, reasonable, and allocable. And we went into a little more depth about what each of those means. So whenever you're looking at a cost, you want to look at those general principles first. And all team members should be aware of those general principles. Also, OMB A122, as we just discussed a little bit earlier, addresses how you would treat costs. And we also went into that in a little more detail in Webinar 1. Do you treat it as an administrative cost, a shared cost, an indirect cost, or a direct cost? And then OMB A122 talks about specific types of cost, what is referred to as a selected item of cost. And in this instance, we're going to talk about personnel costs, in particular salaries and wages. What's important to note is that even if there is a cost that's not addressed as a selected item of cost, that does not necessarily mean the cost is not allowable. In that situation, you would go back and look at the general principles to determine if a cost would be allowable, and then also you might look at some administrative opinions and other forms of information that are out there to help make that decision. So in here, on this slide, as I mentioned, we're talking about personnel. And the reason we're talking about personnel is because typically staff, as we all know, account for at least half of the program budget. So it's really important that, that the team understand how to address costs associated with personnel. Generally, for personnel costs to be allowable, a grantee has to have a system in place that promotes efficient tracking of those costs and also enables a review of staff time that would be allocated to that funding source so that you can ensure that those costs are properly accounted for, the time is being duly noted. So I just pulled out this excerpt from the internal budget that Washington and Morgan put together that we introduced a little bit earlier in this webinar. So you can see here, as Jerry talked about a little bit earlier, that personnel costs were a major part of their budget, and they separated those personnel costs out into two areas, wages and then fringe. And we're not going to focus on fringe right now. We're going to only focus right now on wages. So as a team member, when you are trying to figure out, okay, well, what are we going to need to do? If we're going to put personnel costs into our budget, what do we need to do to make sure that those costs will be treated as an allowable cost? And the place you want to look, of course, is your funding opportunity notice to start. And then in this instance, in our example, OMB Circular A122 is going to provide us with that guidance. And this is from the section of OMB A122 that deals specifically with personnel costs. And it basically says that in order for personnel costs to be allowable, they have to be documented and they have to be approved by a responsible official of the organization, and they have to be supported by personnel activity reports, what's often referred to as PARs. And we're going to talk a little bit more about PARs in the next couple of slides. I just want to mention here we have another orange box to signal a possible change to the way we've been doing things. The proposed OMB Super Circular basically may do away with PARs as we understand them. They are potentially will no longer be required. Instead, annual or semi-annual certifications of after-the-fact allocations of time or some other reasonable method of allocating compensation will most likely be permitted. Again, this is just a proposed change, but it's something to be aware of that's on the horizon since all community action agencies are working with OMB Circular A122 or some variation of it. So as I mentioned earlier, generally when you're looking at a selected amount of cost, you've got to determine if it falls within the general principles of whether or not it is allowable and or reasonable. As you'll see here on this slide, we talk about, well, what would you think about when you're looking at wages to determine whether or not they're allowable? Well, you want to see if they are reasonable in relation to the services that you're going to be providing. You want to make sure that they conform to your established policies, that you're treating them consistently as you would treat other types of personnel wage costs, and that they're supported, of course, as we've already said, by documentation. To determine if those costs would be reasonable, you would look at comparable organizations, ones that have run similar programs, to see what they paid their employees who were performing a similar task and providing similar services. These are ways in which you can make sure that the cost that you are charging will be considered allowable costs. As with the cost allocation toolkit, the partnership also last year, they were very busy, and we are thankful for that, and we were busy too. They put out the personnel activity reports, do's and don'ts toolkit. It's very helpful and informative. CapLaw was involved in that, along with Whipfly, who are financial consultants and financial management consultants and work often with the Community Action Agency Network. So just to kind of see how you guys deal with your personnel activity reports, can you tell me, do the personnel activity reports used by your community action agency reflect actual time spent by employees? Everyone could just take a moment to answer that poll and let us know.
All right, that poll should be in your right-hand panel. And we do have several people that are starting to get those answers in. You do have about 30 seconds left to get it in.
I just noticed, guys, a typo on this slide. it says personal activity reports, which they are, very personal to whoever is having to fill them out. It should be personnel activity reports. I apologize for that. We'll get that corrected so it'll be right on the when these slides are posted on the website. Well, great. Luckily, over a majority of you guys said yes, as you can see on the screen. Those of you who said no, well, we'll just leave it at that, and we'll move to the next slide. Hopefully, you'll get something out of today's webinar. Maybe you understood the question a little bit differently. So it is very important. One of the requirements and standards for personnel activity reports is that they do reflect the distribution of activity performed, so actual time spent, not budgeted time. So that is a major requirement of PARs. They also need to account for the total activity that employees are paid to perform, and also they must be completed so that they show that the employee is fulfilling any obligations that they said they would meet or fulfill pursuant to the grant proposal. They should be signed either by the individual employee or by a responsible supervisor, and they should be prepared at least monthly and coincide with one or more pay periods. So these are just the standards. When you're looking at your different funding sources and your funding source requirements, you need to look and see, are there other standards related to that funding source that we need to be compliant with? And all team members, especially the program director, but everyone needs to be aware of those standards because they're the ones that are going to be overseeing the programs and making sure that these requirements are being met. So to that end, I have been talking a lot. I know you guys are missing Washington Morgan, so I'm going to let them talk to you a little bit about their personnel activity report.
This is Jerry again. So what you're looking at is what we would call a timesheet. It includes both work and non-work time, which helps us comply with the Fair Labor Standards Act. You will notice on the left-hand side at the bottom of the timesheet, we list all of the non-work codes. And you will also notice from this timesheet that the individual is working on more than one program. We require both the employee and supervisor to sign the timesheet, even though A122 does not. It requires only one. But in our case, it's an internal policy, so it's very important to comply with your internal policies if they are more restrictive than the federal circulars so that you don't find yourself violating your own policies. And then Allison will talk about the next personnel activity report.
Okay, so I put this one in here because there is some question as to whether or not you need to have actual activities associated with the funding source, those activities that you're performing to further the obligations under that funding source. So this is an example that came from that personnel activity report toolkit. It's actually Exhibit G in that toolkit. And it just shows that here, in relation to the Head Start program, here are the activity codes, and if you flip to the next slide, you can see here they are listed here, which shows the specific activities that would have been done or performed for that funding source or grant. So that's the main reason why this personnel activity report is put in, to show you an example of that. And again, if you want more information about personnel activity reports, please check out the toolkit on the Partnership and CAPLAW's website. All right, we're going to talk about another selected item of cost because it is treated a little bit differently for the HPRP program, and we want to give you guys a flavor of how the team would approach these different costs when they're coming up with their budget proposals. It seems like we're kind of drilling down hard on certain areas, but this is what you have to do as a team to make sure that all these costs that you want to charge to this program will be allowable costs. So as you see, I've highlighted here on this screen travel and training. We're going to specifically talk about training. Training costs were a part of the HPRP program. And again, OMB Circular A12 was the funding source requirement that specifically dealt with part of training costs. It wasn't the only requirement that was applicable, but it was one. So it's important to note what training costs would be considered allowable under OMB Circular A-122, and specifically here it talks about cost of on-the-job, classroom and apprenticeship training, and that training needed to increase the effectiveness, the vocational effectiveness of the employee, and it also talks about what type of costs, the tuitions and fees, would be covered. Now, not only is this a requirement that is applicable when you're looking at training costs related to this HPRP program, but if you look at the funding opportunity notice, a document that is near and dear to everyone's hearts, right, when they're looking at a funding source and working with it and creating their budget. In that notice, it had specific information in it, and it was located throughout the funding source notice regarding which cost would be considered allowable in relation to training. In this instance, it said that the training of case managers and program administrators would be an allowable cost. And what's interesting here also with the funding opportunity notice is that it also talks about how those costs would be treated. So as you see in the sub-bullet here, when we're talking about case managers and program administrators, those costs, training costs, would be treated as administrative costs, whereas Jerry talked about a little bit earlier when we were looking at the internal budget that they put together, data tracking and evaluation training would be treated as a direct cost, because that is one of the eligible activities that is under this funding. The funding source, funding opportunity notice also talks about which training costs specifically would not be allowable. So here, as you see, we just have on the slides excerpts from the funding opportunity notice. The funding opportunity notice is available as sample 1 attached to webinar 1. So if you would like to just look at it a little more closely in tandem with the webinar slides, it is available to you. So you can see here in the sentence that we've highlighted, in this part of the funding opportunity notice, it dealt directly with the eligible activity of data collection and evaluation and talked about which costs related to training would be considered allowable. And this goes into how much would be allocated in the budget proposal to training. Again, this is the section dealing with administrative costs, and it was in this section that it talks about the training of program or case managers when they're learning when they're learning skills that are directly related to the HPRP program. And then here's the section from the funding opportunity notice that deals directly with which costs are not going to be allowable in relation to training. And you can see here it's costs to pay for certifications, licenses, and general training classes. So the funding opportunity notice, again, is a very important document to take a look at when you're analyzing which costs will be allowable and which costs you can include in your budget proposal. Jerry, Dawn, and Carrie, do you guys have anything else to add to that?
No, thank you.
Great. All right, so here we are at our learning objectives slide, and we have made great progress. Hopefully you guys are all sticking with us through this. We've looked at how to develop budget categories and line items. We've kind of nailed down into some of the specific administrative and cost principle requirements that might apply when the team is looking at a budget proposal. And now we're going to turn our attention to the process that you would go through to finalize a budget proposal. And in particular, well, before we do that, I want to ask you guys another question. It's always fun to throw the ball back in your court for just a minute. So who is responsible for ensuring that the budget proposal sent to the funding source is in the correct form? So please check all that would apply in your situation. Who is responsible?
All right, everyone, that poll is open on the right-hand side. You do have about 20 more seconds to get those answers in. We see that many of you have already gotten started. All right, the poll is closed, and we will be sharing results momentarily.
Hey, this is interesting. It looks like in a lot of organizations that are on the call, it's the financial director, the CFO, but the program manager is a close second, which is good news. Really, everyone listed on this slide should be involved in making sure, and they have that the budget proposal is properly in the form that it needs to be, but the extent of their responsibilities will vary depending on their role. And I'm going to turn it over to Washington Morgan, to Carrie, Jerry, and Don to talk to you about, specifically in relation to the HPRP program, placing that internal budget that we looked at earlier in the slides in the funder form.
This is Jerry. So at this point, we have agreed upon all the types of services, the number of services, and all of the related costs. The next step then is to put those numbers into the forms supplied by the funding source. So generally, it's a matter of applying the percentages of clients that we have established will need to be served in each of these categories. The budget, because this is ERA money, you will notice that this is slightly different than what you would ordinarily see in a budget, in that with ERA money, we were required, as was everybody else, to track the number of positions retained and the number of positions created. Ordinarily, you would not see those two columns in standard budgets.
And let me just interrupt you real fast, Jerry, just to say that ERA is the American Recovery and Reinvestment Act. It's the stimulus act that came out in 2009. Sorry, Jerry, just to make sure everyone's on the same page there.
Thank you. Then what you're looking at, this budget and the pages that follow, this will become the basis and the actual budget that will be input into the accounting system once it's approved by the funding source. And it's also what we will use then to generate the tracking reports, which we talk about in detail in webinar 3, their generation and their uses for forecasting and for reporting purposes. So the next several slides basically show the input of that information into the funding source forms based on the work of the team. You will note as we move to webinar 3 that some of these items, for example, in the next slide, when you look at legal fees, we quickly found out that it was necessary to do some budget revisions when we found, as we will discuss in the next webinar, that we really did not need those fees. And again, when you're looking at this form, it is atypical in the sense that it is recovery money, and generally we're tracking some additional data. The budget had to be submitted in each of the categories, or what we call components, such as prevention or rapid rehousing. We had to do separate budgets for each of the components, data collection and administration. And generally those costs, as you flip through the slides, will show you all of the components that, as you can see, this is data collection. What did we plan for data collection? And moving on from data collection, you will see the supportive costs. For example, we needed to have computer costs. And the administrative costs, those are typically administrative costs of your organizations, no different than most of you do. Travel, training, audit, photocopying, insurances. One of the things that we try to always allow for and cover is some what we call subscription or newspaper or promotional items, so that we can promote the program, or we can subscribe to some periodicals that might help our clients with housing issues or whatever the specific program might be that we're applying for. But generally, the putting it into the funding source forms is the easiest part of the project, because you've worked out all of the detail in advance, you've worked out all of the client percentages, and simply this comes back to finance department to apply the appropriate percentages and put it on the appropriate forms. And now back to you, Allison, for the next segment.
Thanks. And it's also important when you're working on your internal budget proposal, as you saw in the very beginning, you know, it didn't necessarily look like this. what the funder form looked like. But it's important to take a look at that funder form as you're creating your internal budget proposal so that you're kind of working in tandem. So when it does come time to take the data and the information and the numbers in your internal budget proposal and dump them into the funder's form, it's not a difficult process, and you're not trying to calculate certain numbers because you didn't anticipate a particular category having to be addressed. All right, so finalizing a budget proposal isn't too difficult, and we just sort of walked through that real briefly with the HPRP program just so we could have some continuity in the information that we're talking about. And so now we're going to move to a really important part of the presentation, which is how to develop a tracking budget. So I want to find out from you guys who in your CAA, your Community Action Agency, is responsible for reviewing the tracking budget. Who is responsible? Let us know.
All right, that poll is open. See that a few of you have gotten started. You do have about 25 more seconds or so to get your answers in. For those that have been keeping track with their handouts, this is the last poll, so hopefully we will get full participation this time.
Oh yeah, and I do apologize. We had a slight misnumbering on the polls. It's correctly numbered on the screen, but in your handouts it says poll 7, and it's actually poll 6. So I apologize for that. Again, those handouts will be correct when they're posted on the website if you'd like to print that page off again. Okay, wow, that's an interesting result. It looks like in most organizations, the person who is mainly responsible is the financial director and the CFO, as you guys all see. The program manager is a close second, which is good, and then the other individuals are not too far behind. It's really important for all of these individuals to be reviewing the tracking budget. The person who would be probably the most responsible for it and looking at it more frequently would be the program manager. So once the budget has been finalized, it's been approved by the funding source, then you move to developing a tracking budget. And again, this is one of the most important documents that you're going to be working with throughout the program. It's going to really enable everybody on the team to keep track of key areas of cost. And because the program director or manager let me get rid of that poll. Because the program manager or director is so intimately involved in facilitating the program, they really are going to be in the best position, though all of those team members need to be have the ability to look at the tracking budget and look at it on a regular basis. But really the program manager is the one that's going to be in the best position to identify potential errors perhaps in the accounting system or to see deficits or surpluses. Oh, I want to just mention, it's also important, as noted on the last bullet in this slide, that another reason a program manager is a key person to reviewing this tracking budget is if there is a change in one program that the program manager is overseeing, maybe there's a staff or personnel change, that staff member could also be working on another program. And so that could really trigger some movement of money in one program versus another program. And as we will see in the next webinar, Webinar 3, those budget revisions may be easier for some programs and more difficult for others. So it's really important that you understand that you're tracking the budget and the program manager understands sort of what's going on financially with each of these programs. So here are some key characteristics of tracking budgets. Tracking budgets should be easily understood. They should enable the program manager to quickly look at a point in time within a certain funding period and determine how much money is remaining. They should focus on key costs that are likely to change, and they should give more than just an overview of the program budget. Carrie, would you like to talk a little bit about tracking budgets and sort of how you look at them for trends and forecasting future expenses?
Hello, this is Carrie. So as Allison said, the budget tracking needs to be placed in a form that would allow me to look at the key areas of cost, and again, as Allison said, to track those easily. So as detailed on this slide, we knew that the form needed to be in an easy format for me to track the expenses for each of the category. And I knew I would use the tracking budget to ensure that we would not overspend and we would stay on track in each of the categories. And also one of the things, HPRP was a new program, so we needed to be able to see the trends and where the money was being spent. So in the beginning, I knew that I would need a tracking budget at least monthly, and then as we move forward, we would need to see the tracking budget more often. And then I also knew that I would need access to the reports from the accounting system so we could drill down and look at the further details. But again, as Allison said, the tracking budgets were very important for us to watch the trends of the program because, as I said, it was very new. And Jerry, I think Jerry has something to add also.
Oh, great.
On the next slide, you'll actually see an example of what we used as a tracking budget. And if you refer back to the proposed budget in the application from the funding source, we took the primary categories, not all of the drill down level of detail, and exported that from the accounting software to an Excel spreadsheet so that the program director could use this to not only look at where she was currently, but also to forecast forward. The accounting system had all the level of detail that we put in the budget to the funding source, but it was not necessary for the program director to have that level of detail every day. It was available anytime he or she wanted it, but for right now, we rolled it up into a tracking budget. And we'll talk about reports and rolling up data in Webinar 3 also. But it's important that the accounting system be able to generate the information necessary to complete not only the tracking budget, but the expenditures. And it was interesting to see from the last poll that you took that the CFO has a lot of responsibility for the tracking budget, and I always maintain that by the time the costs get to the accounting department, they have already been incurred, and the program director really is the person who is right there and can control those much better and can make decisions with respect to whether to continue incurring costs or whether it's necessary to come and talk about a budget revision. So the program director is really the person who is at the front end of this process.
And so as we noted, Allison, with HPRP, and we mentioned before in the previous slide, it was a new program. So when we first started getting the tracking budgets, we could see the trends and we could see which services were being accessed and which program was progressing more often. And as Jerry said, by the time we got to the accounting department, the costs had already been incurred. So it was important for me as a program director to watch those costs. So when it was time to make a budget revision or we were watching to see trends and where we wanted to see the money, it was important that I had that report first and then also could have the information from the accounting software when I needed to make a change to that budget.
And you can see on this slide, this is the initial tracking budget, and that's why the prior period is blank. We have the next tracking budget in the series, and you can see there the prior period. You can Carrie could already look at this and start noting trends in the program within the first month of it occurring. And as noted at the bottom of the slide here as part of this tracking budget, this is the tracking budget that was used to inform the first report that was given to the state. Do you guys have anything else, Carrie, Jerry, Dawn, to add?
No, other than the fact that that tracking budget was generated every week and was available to Carrie online also, so she could do her projections forward. And that's having the program director have the information rapidly and readily is critical in terms of permitting that person to make the decisions about budgeting and about programs for which they are held accountable.
So for the HPRP program, we were really dealing there with a tracking budget, that only had one funding source. For a lot of community action agencies, you're going to be tracking multiple funders for one program, and that can be a more difficult task, and so it can be trickier to do. So it's really important when you have that type of scenario that you determine the costs that are associated with the different funding sources right up front. You'll know which cost each individual funding source is going to cover. And once you have that kind of information, you have a basis on which you can then develop tracking mechanisms to account for those funders' costs separately, because as Jerry will talk about when she talks about a little bit with accounting software, and then the next couple of slides where we have a sample of a budget that tracks multiple funders, you'll see that the different how you deal with the different funders could affect the different the program itself. So Jerry, you want to talk a little bit about the accounting software?
Sure. As Allison said, one of the best ways to track multiple funding sources and multiple expenditures is to have a sound accounting software. This is a very big investment of both time and resources for any CAA. So my best advice is don't let somebody else drive your system. Be responsible for it, because you're going to be responsible for the output. Ensure that when you're looking at software that you're not just thinking about today's environment, today's programs. Reserve the flexibility to add programs, grants, multiple categories within the same grant, and then give yourself lots of flexibility to drill down, to look at data. Software should be able to track revenue by type, for example, federal and state. This is not only to comply with the reporting to the funding sources, but also, as the CFO, you're going to be putting together the agency's federal schedule for your A133 audit. And so your accounting software should be able to do this for you without you having to do a lot of information and a lot of roll-up into Excel spreadsheets. The accounting, if you allow yourself the flexibility and input the data, then you should be able to drill down to see individual costs. Most people want to look at a composite, and we'll talk about that in the reporting section of Webinar 3, but it's important that you input the data, and as you build your software, allow yourself the flexibility to have multiple levels of detail, even though you may only use them very intermittently, but in terms of applying for future funding or for new programs, you can readily look at all of the costs of your organization in multiple ways and across multiple programs. And so an investment in software is really something that you should drive and not let somebody else do it for you. If you look at some of the upcoming slides where we talk about multiple funding sources, we used a very small example, a very small program, where what we would call the first report that you're looking at is what we would call a rolled up or snapshot of the program. It talks about the types of revenue in the program. You'll see that we had federal revenue in that program. We had recaptured housing funds from a prior period carried forward, and we had current year recaptured funds. And then the roll-up shows the expenditure of those costs. Now, the next slide breaks that down into the categories that we wish to check. First, we wanted to account for the non-direct costs because we needed to be able to report those separately to the funding source. Typically, you might refer to those as administrative or operating costs. Basically, they're the staffing costs necessary to carry out the program. And then the next slide will be the direct service costs. There's no staffing in this. These are basically the direct output to the customers. Were we renovating properties, and were we paying for contractual costs to have those inspected? Those were the sole direct costs. So that's the level of detail that we tracked. Then we also wanted to track and be able to account for our housing recaptured funds. What was the purpose of those? How did we use them? So as you can see, the first slide that you saw basically tells you everything totaled up together, snapshot picture of the program. But if you want to drill down, and then within each of those line items, for example, if you look at this under the expenditures, it says total fringe benefits. The accounting system will allow us to drill down to each one of those fringe benefits separately. We can look at FICA, Medicare, unemployment, workers' compensation, 401k, disability, that's what I mean by drilling down into your accounting system. We can look at that level of detail for any program. We can look across all programs, and we can roll it up into a report for the board that is a snapshot. We can roll it up into divisions if we want to compare one division within the organization with another, and we can also roll it up by program for our audit report without having to do a lot of detail work by exporting it to Excel. Certainly, this software that we use, which is called Sage MIP, well, it was until last week, until it was purchased by a company in the Silicon Valley, and apparently will be changing its name. But this software is certainly allows the ability to export data to Excel, which we do for our program directors, so then they can just add columns and use that for forecasting forward. So basically, to wrap up the software discussion, it's really critical that you drive your software, you develop it, you design it. Certainly, if you have to use consultants, that's great, but make sure that they're actually carrying out what you want and what you see for your organization 10 and 15 years down the road. Back to you, Allison.
Great. Thanks, Jerry. That discussion concludes our webinar as far as the learning objectives are concerned. Just to recap, we focused on developing different budget categories, the questions that you would ask to help create those assumptions on which those line items and budget categories are based. We looked at specific applicable cost principles and administrative requirements. We looked at some examples of when an administrative requirement might comply, when you might have to comply with an administrative requirement, and the fact that all team members need to understand that, as well as with OMB Circular A122 as an example, when a cost principle requirement, such as one from the selected items of cost, would apply, and all team members would need to understand those requirements so that they, when they're creating the budget proposal, working as a team to do so, they don't put in there costs that are not going to be considered allowable. We then looked at finalizing that budget proposal, putting it into the funder's form, what that means, and how you take the internal budget and move it into that form. And then we spent some time talking about a tracking budget, how you would develop it, how important it is, and what you might have in place if you're going to be working with a program that is supported by multiple funders. And with that, I'm going to conclude Webinar 2. I just want to, before we turn to see if there's any questions regarding Webinar 2, I wanted to let everybody know that there is one more webinar in the series. If you've made it this far to Webinar 2, you can make it to Webinar 3. I know you can. It will be this Friday, July 26th at 2 p.m. Eastern Time. So we really hope that you will be there with us for that one. We're going to talk about budget revisions and reports. If you typically go to the beach on Friday, please log in using your PDA device. You can listen to us that way. And maybe we could even get you on camera and see the beach. So let me go to the chat box and see if we have any questions that it looks like we might have a couple. Give me one moment so that I can see if there's something here that we could answer. So one question that came in is, would work hours, wage/fringe, spent training be allowable as a training cost? Okay, that is a loaded question. And that is a loaded question because Well, it's not actually a loaded question for this instance. In this instance, because training was a part of the grant in the HPRP program, it would be considered part of the cost associated with the program. So if an employee, is that how you treated it, Jerry and Carrie? When an employee went to get training, it was during work hours and on work time. Is that correct?
Well, certainly, because the employee is carrying out an activity of the organization and is being paid by the organization.
Right.
There are some budgets that specifically have training and technical assistance components to those budgets, and they very specifically prohibit you from charging staff time against the training and technical assistance budget. Rather, you have to charge it against the line item budget, such as the administration or the operation. So while you may have a budget that has administration, operation, and training and technical assistance, there are some funding sources that require that you spend that training and technical assistance only for the actual training component and not for the staff time related to the travel or the time that the employee spends in training.
Yes, and the reason I alluded to the fact that that's a loaded question is there are also some Fair Labor Standard Act requirements regarding training time. So if an employee is a non-exempt employee and you are requiring them to participate in training and they meet a couple of other requirements related to the Fair Labor Standards Act, then that might be hours worked that you would need to pay for. So if you want more information about that, we have more resources on the Cap Law website. I won't go into that kind of detail. So if for some reason it isn't a covered cost by the grant, then you want to think about how you're going to cover that cost, what kind of funds you have available. We talked a lot about what funds you might use to cover costs associated with a program that may not be covered by the funding source in Webinar 1, and we're going to talk a little bit more about that in Webinar 3. Another question that came in, do most program directors have access to the accounting software system for budget tracking purposes? Well, we would recommend that they do. I think Jerry and Carrie would support that response. Is that correct?
There's a level of access that needs to be safeguarded, and there are many agencies that allow read-only capability. It is best to only allow read-only because you don't want the accounting data exposed to use by non-authorized users. And if it is easier within an organization, if you have off-site people, it's easier to export the file to Excel and then email it or put it in a common directory. But certainly having read-only access to the accounting software should not be prohibited.
And we have one more. It's really more of a comment than a question. Someone said, I wonder what other agencies use for accounting software. I know the software I currently use does not work well. So if people on the call have a software that they have enjoyed and they think works well with their organization, it would be interesting if you would send that information into us. You could either send it to, probably the best source would be to send it to the partnership. They do have a training and technical assistance website. I don't know if Cashin and Andy are on the call, if there's a way that we could collect that information from the group.
Sure, there's a couple of different ways. First off, if you know it offhand, you are welcome to put it into the chat window of the webinar right now. We can read off a couple of them, and we can also collect all of the comments and stuff at the end. You can also put in, like Allison mentioned, on TNTA requests, and we can get to work on researching that. That is at www.cscgpta.org. We do have a few that are coming in through that chat window. Stage Fund Accounting, GMS, Orion, MEOAG. We have another vote for Stage Fund Accounting, a couple of votes actually on that for Stage 100, Stage MIT, which I assume are kind of different versions of that software. So
Formerly MIT.
Formerly MIT, there we go. We have
Stage 100, formerly MIT.
So hopefully that gives a couple of quick ideas on some places to go for that.
All right, I think that concludes our questions. Andy Cashin, have I missed any questions or comments?
I believe we have gotten all of them, and we are getting close to our time, but we will keep this open for another minute or two if we don't see any more coming in, so you can send them in, and we will capture them and either put them into a frequently asked questions or address them at the beginning of the third webinar. So do continue to send those in. If we're out of the webinar, then you can email them to us here at the partnership. Probably go to Andy Cruz, that is A-C-R-U-Z, at communityactionpartnership.com. I will put that in the chat window for you guys as well.
All right, we really appreciate everybody joining us today. We hope that you were able to listen to Webinar 1. If you weren't prior to participating in Webinar 2, again, it is recorded and available currently on the Partnership's website. And we look forward to seeing everybody on Friday, this Friday, July 26th, for the final webinar in this series where we will be talking about how you would go about revising a budget and what kind of information and what kind of reports you would put together to give to your stakeholders. All right, thanks everyone.
Thank you. Have a good afternoon.